I want to bring back Frances Donald. She's Global Chief Economist and a strategist at Manulife Investment Management, who's been our guest host this hour. And the housing story is one that you're watching closely as well.
We're watching it, but we're watching it for different reasons that we used to watch housing as economists. We used to say, okay, well, if people lose their jobs or they're facing higher interest rates, then we should see housing weaken. And what's been really strange is that we've had one of the largest increases in interest rates in many Canadians' lives, especially when adjusted for debt, and yet housing has not broken. And that's because we have an entirely new factor at play, and that is really substantial population growth. And it is trumping just about all the standard analytics and data points that we used to examine. Bank of Canada had a great chart in its April monetary policy report, chart 15. It's seared into my memory. It showed that we are building about 250,000 homes a year about in Canada, but household formation, that's new families that need homes, is running almost double that, John. So for every house we build, we're building up this backlog of two families that need it. And the bigger problem is that we're operating at 100% capacity when it comes to building in Canada. So we can't even increase that building number in a substantial way. So even though I see recession risk is elevated, even though we know consumers are struggling under the weight of higher interest rates, especially those that are going to be renewing in the coming year, we're really being dwarfed by population growth, just overwhelmingly providing demand and providing a bid under housing.
So if you're a central banker or the head of the Bank of Canada and you're trying to navigate this part of the story on what you do with interest rates, what do you think is the best way to think about it?
Well, the Bank of Canada themselves has been a little more vocal lately that, well, housing is not really going to be the main driver of interest rates. Now, they do need to monitor, is there frothiness coming from the credit channel, for example? But I think we're going to hear more from the Bank of Canada, or maybe we should, that they cannot be responsible for the outcome of housing when they are being dwarfed by such substantial population growth.
And at the same time, the reality of some of the we were talking about inflation before the break, some of the inflation metrics that we've been watching every time we get an inflation report come out of the housing market because of this higher interest rate environment. So that is the one thing that they can control. Where policy rates are, they don't control, obviously, what's happening with the population itself. But what do you make of the inflation that's coming from things like higher rents or higher mortgage costs? How do we have to think about that?
If you make a table, as we do, it's real fun, of every single component in CPI, shelter is the predominant one providing the lift, which is why a lot of economists have started doing more CPI X shelter to get a sense of what's happening. Now, Canadians may feel uncomfortable with this. Shelter is one of our largest personal expenses. Why would we exclude it? But the Bank of Canada and all global central banks is going to have to start making some decisions. Do they risk recessions? Do they raise unemployment to try to bring down inflation that is less susceptible to interest rates? I think we're at a big conversation about what central banks can do in a world that is really being dominated by more supply side factors. Similarly, food prices aren't real high in Canada and elsewhere because you and I are eating too much, John. They're high because of global factors, supply chains, geopolitical risks, droughts, weather events that are occurring outside of our borders. Can the Bank of Canada bring down food prices? At the margin, maybe. But we got to have some conversations about just how powerful central banks are and how much pressure should we put on them to solve problems they can't.
Well, they give us a lot to talk about, so we definitely like to ask those questions. Real quickly, we're almost out of time in this block, but the idea that if there's a signal from the Bank of Canada that it's time for a pivot, and maybe that's next week, some people say, oh, that's going to lead to a whole bunch of people coming back into the housing market. What's your view on that?
My team and I were talking about this because the Bank of Canada has already signaled that a pivot is coming. You might remember Governor Macklem telling us June is on the table. That was the headline of the day last month. And yet March and April housing data was actually a little bit softer. Now, as I said, we think there's a floor under housing, excuse the pun, but we do think we need to monitor that we didn't see that big uptick that occurred even though the BOC has indicated a pivot ahead.
Okay.